Hey y'all, hey, welcome in. Hope you're excited about starting your trading journey. Today we are going to be talking about market structure. Market structure is super important. It is the meat of trading. I absolutely believe if you don't understand market structure from a technical standpoint, that it's going to be extremely hard to become consistently profitable by looking at the charts. And if you're not a technical trader, then that makes you a fundamental trader that follows news events, things that are going on, Trump tweets, and all these other things that can fluctuate in the market and that aren't truly consistent. One of the other things that I'll point out about fundamental traders, not to speak poorly on fundamental traders at all, but one of the things that I noticed in my journey when I tried to kind of pay attention to what was going on fundamentally was when certain events that would happen, like CPI or housing or employment or any of these events that would come out during the course of the month, if those numbers were negative, they didn't necessarily mean that the market was going to be a red day. Or if those numbers were positive, it didn't necessarily correlate to a positive day in the market. So for me specifically, it caused more confusion than not. And so I tend to focus purely on technical analysis to enter and exit my trades. So with that said, let's get into it. I do want to preface this with please like, comment, and share this information out to another trader that it may help. All right. So jumping into technical analysis, we are going to be looking at not oil, although oil would be a great one to look at. I'm going to erase all these drawings off of my screen. And we actually may take a look at oil too. So in addition to trading the options market, I also trade the futures market. And what I'll say about that is if you understand how to do technical analysis, you can trade anything that you like to trade. It really all is the same. So what I like to do is look at the highs and the lows in the market. That will tell you whether or not price is going to continue in that direction or if it's going to change directions. All right. So there are two terms that we want to know that are fairly important when we're looking at market structure. The first is break of structure. A break of structure is merely a indication that price is going to continue in that direction. So the second term that we want to be aware of is change of character. And this is an indication that price will change directions. All right. And I generally will abbreviate break of structure with BOS and change of character. I abbreviate as such. So I'll give you guys a second to jot those down before we go into an explanation. All right. So let's take a look at this. All right. So if we're just eyeballing this, we can tell that price here is clearly in an uptrend, clear uptrend here. But what we don't know is as price is happening, how do we know that these events that happen in the future will actually happen? And that's your job as a trader, is to try to not predict the market, but read the market. So if I'm looking at this, I can clearly see that there are some highs here. There's a high here. There's a high here. There's a high here. And this high is continuing, so I will not mark it. You'll notice that I will not mark a high. You can't mark the high because you don't know how high it's going to go until there's actually a pullback that happens. So pullbacks have happened on all these highs, and so we can clearly mark them. We also have higher lows that have happened, right? So these points and this point here also is a higher low. All right. So in an uptrend, our break of structure, as we noted over here, a break of structure is an indication that price will continue in that same direction. So if we have this high marked off, let me just open it up a little bit. If we have this high marked off here, that generally occurs in this area, right? So it would encompass all these candles that happen, but truly the candle that closed highest, which would be this green candle here, we can mark it with our line here, would be the high of that candle. I would not reference this red candle here because if we understand the anatomy of a candle, we know that there are four parts, and those four parts can be found at the top of your screen up here, which is open, high, low, close, OHLC. And so the high of this candle is the top wick. The low of the candle would be the bottom wick. The open on this particular candle, because it's red, would be the top of the body, and the close would be the bottom of the body. It would be the inverse of the green candle here. The high of that candle would be the top wick. The low of that candle would be the bottom wick. The open of this candle would be the bottom of the body, where the body starts, and the close of the body would be where the body closes up here at the top of that green candle. So because the green body has a higher close than this red candle, where the body closed down here at the bottom, we can safely say that this green candle is indeed the high of this particular set of candles. All right, so we don't have a break of structure until a candle closes above that high. I'll just make that a little bit more exact. So once price progresses, you can see that price wicks at that high. Those would not be considered a close above the high or a break of structure. Again, it wicks it over here, doesn't close above. That's not a break of structure. It isn't until this candle here that we have a close above that candle that we can say a break of structure actually occurred, in which price pulls back and then a continuation happens. You'll see that that happens over and over again, right? So again, in this group of candles, we have another set of highs. If we simply mark off our highest closing candle, which would be this green candle here, we do not have a break of structure until this candle here. That would be considered our break of structure. And you would continue looking for these highs every time you got a pullback in order to know that continuation, that trend is going to continue post that pullback. So you're looking for your break of structure for continuation of the trend. All right. Same thing here. Now this, we have not had a pullback yet. So I would not be quick to jump into a long position just because there was a break of structure. you do need your pullback in order to, safely get into a long position. Otherwise, that would be considered chasing the trade or chasing the chart, chasing the candles, however you want to put that. It would be the inverse in a downtrend if we're talking about break of structure. So in a downtrend, it would look something like this. All right. And so every time we got a break of our low, that area would be considered a break of structure. So you have break of structure, continues down a little bit, then it pulls back, continues down, pulls back, continues down. So this would be our break of structure. This would be our break of structure. This would be our break of structure. When we talk about change of character, that would imply, uh-oh, that would imply that instead of just a regular pullback, we indeed had a break of that last high, which would change the direction of our trend. Okay, so now instead of it respecting the previous high and just coming up and giving us a pullback and then continuing down, this time it went beyond our previous high, giving us a change of character. So this was our change of character. We get our pullback, and then now the trend continues in the same manner. So now when it breaks this high, we have our break of structure. And that goes on and on and on. Now, I do also want to point out one additional thing. So within structure, you have what's called major structure and minor structure, and you will have that on every single time frame. Major structure are your major swing highs and swing lows that you can see clearly without zooming into the chart. So if I'm pointing that out here, I can, and I'm going to go ahead and delete these. If I'm pointing that out without looking at any specific candle, I can clearly see highs and lows of this. Okay, so that would be major structure. But if I dial in a little bit to say, let's go down a time frame so we can see a little bit better. All right. So if I look at this little piece of a downtrend, on the major time frame, it just looks, it's just a clear shot down. But if I look within that down frame or that downtrend, I can clearly see a trend within a trend. Okay. So this would be considered minor structure within major structure. So minor structure follows the same rules that major structure follows. I will point out in this example, in minor structure, we have this as a low. I'll delete this. We have this as a low. And as you can see, price breaks this low, comes back up, creates a higher high, or I'm sorry, a lower high. And we can see this is our last low right here. So a break of this area would be a break of structure. Then we get break, pullback, another break of structure. And so this would have been our last high that occurred before this last low that occurred. And until we break that high, and as you can see, price gaps up, respects that level and continues. But until we break that high, this would be considered a change of character because we went from a downtrend to an uptrend. This happens on every single time frame, whether you're trading the daily, the weekly, the hourly, the 15-minute, 5-minute, 1 minute, it doesn't matter. Structure occurs on every single time frame. And that is market structure in a nutshell. If you can wrap your head around the movement of the market and understanding whether you're trading major structure or minor structure, you can be very, profitable in the market. And I would just encourage you to watch this video numerous times. Just because you don't see it on the first go doesn't mean you won't see it on the fifth go or the sixth go or however many times it takes you to really wrap your head around what market structure is. Now, there are some other confluences that you can use with market structure that I go over in my course, but market structure is definitely the meat of understanding the market. So I hope this video helps someone out there. Please leave a comment down in the comment sections letting me know what you think of this video, and I will see you on the next one.